Let's bring in Michael Vogelzang. He's Chief Investment Officer with Captrust, here with our guest host, Sarat Sethi, to join the discussion. You know each other very well, we should add. You're very collegial. So I don't know if we want to jump right into the political aspect here before you just offer a top-level thought about the market.
Yeah, it's top level is that, look, everyone knows that during election years with an incumbent, we get really good results, right? The average is 17% or something like that. And as I was saying earlier, we're on the Autobahn. We've got the green light. The problem is we have a 5 or 6 month brick wall in front of us called the election, and no one knows, including the market, how this is going to play out. And as a result, there's lots of negative outcomes that could happen. And what's puzzling to us is why that isn't getting discounted a bit. Right?
Is it not? Do you see any signs that Wall Street is not discounting a Trump win here or a Biden win?
It's
here?
not much. There's there's some.
We may know more tomorrow.
There's some stock. Yeah, right. Wow. There's some stock baskets that you can track and follow, and you can also argue that the rest of the market actually isn't up as much as the technology names. Yeah.
Right. Because to your point, if you look at equal weighted indexes, they haven't performed, especially in the last 6 weeks. Right. I mean, the equal weighted is 500-600 behind now, just in a matter of weeks. So the market's still focused on the momentum plays, but are we now discounting some of that?
Yeah.
Because if you look below, where are we going to go? And then the other question, to your point, is, where does the House and Senate go to? Right. So that politically, and one of the things we always say, and I'd love to get your view on this, is we're always like, look, earnings drive the stock market, the economy, right? But you're getting to a point now. Things could change a little bit. At least you get the bump of the Autobahn.
I would argue that earnings drive the long-term nature and arc of the stock market, but emotions drive the shorter-term stuff. Yeah. And what's odd about this is that you have this big, hairy thing coming at us so fast, and yet the market's sailing along like nothing's wrong. Yeah. And then, of course, you have 2025. We took a look at inauguration years.
Yeah, what happens then? What happens after?
With an incumbent in an inauguration year, you get sort of middling, but a really wide outcome. Right. There's some really positive years. Think of right after the crash in 08 and 09, right? Same thing after COVID. You had a big year because of that. So there's some outliers that have changed. So it's not as much of a pattern, inauguration years, but average is about 6 or 7%. So much lower on the long term. Mm-hmm. But again, with a wide sort of.
2017 was a pretty good year for stocks. 2021 was a pretty good year for stocks, followed by a bad year in 22.
Correct. Right. So the point is that it's again, investors are just super optimistic. If you look at all the sentiment indicators, right, they're super optimistic, and yet we've got this really big, unknowable thing coming down the road at us very quickly.
So what does that cause you to do as a money manager? I
think we hedge, right? We hedge a little bit. So some of the names we talk about in a few minutes are really about smaller and value. Right. One of the things that happened in 2016 when Trump won is one of the great memes of all time, in my opinion, was the baseball cap that said right after Trump won and value stocks started running, it said, Trump, make value great again. Right. And it was terrific. And it was, 3 or 4 months of really strong value stocks. And I think we might see that again because the tariffs might hurt the bigger guys, help the smaller companies. So you might get this rotation. So that's what we're doing. We're actively looking for that kind of name.
What sectors are you focused on? Because, you and I share this value bias, and, of course, people come at us.
Says the guy who's Nvidia is his biggest.
Well, it was a value stock.
It was a value stock.
No, so when we bought it? We bought it in 2016 when it was a gaming stock. Yeah. And it was trading in single-digit multiples. It would not fall into our screen at this point. So, but
right, sectors probably things like finance and energy, because those are the antithesis of all things AI. And they've done so poorly. So we'll see. I mean, but finance, particularly when you're dealing with the small cap index, when you're thinking about small cap value, it's dominated by the financials. So clearly you want to have some of that because they've done so poorly. Again, it's really talking about ballast. If we get a significant rotation, it's likely to be violent given the incredible move in the tech space.
Let me just quickly mention a couple of the names that are, these are certainly off, well, IBM's not off the radar, but Chord Energy Group, a new energy company, you're saying, pure play in the Bakken. Farmer Mac.
Yeah.
Which we talk about Freddie, we talk about Fannie, Ginnie, Sally. Farmer Mac, federal agriculture, another idea there. So you're looking at some really idiosyncratic plays.
We are, but they're not so idiosyncratic. They just don't dominate the headlines like NVIDIA and Microsoft and all the rest, right? So Farmer Mac, AGM, is just this wonderful little company that's sponsored by the Senate, and they are really designed to create credit and liquidity in the agricultural market.
But is it growing 84% year-on-year earnings? Because
no, but
that's what investors who are in the Big Five want.
Okay, here.
They don't want Farmer Mac.